carefully constructed merger gives managers lower general and administrative costs relative to assets because the assets and the free cash flow grew, which is attractive. And they also have more assets to discriminate among when they're allocating capital. So I think that an important part of the upcoming natural resources bull market in the next 2 years is going to be M&A. And to that extent, one of the things that I think we'll focus on in future boot camps will be tier one deposits, which I think is an indirect beneficiary of the M&A. But I think we also may, if our listeners ask us to, do a boot camp, an 8-hour deep dive into what you need to know about M&A and how you identify potential M&A targets. I would leave it to the audience listening to this to comment in the comment section whether or not they think that would be an attractive subject for us to do a deep dive boot camp on.
Rick, I would like to see that sooner rather than later. That sounds excellent, especially considering the phase of the cycle we are in. People at Rule Classroom, I let Rick in the back door today. That's the only reason he beat you guys. Ricardo, you are the winner, followed by Dean and David, JJ, Adam. Good to see all you guys here. Dre is in from Edmonton, William from Chicago, Helen, Diane from La Malbaie, Quebec. She has our first question, Rick, and it's about Visla silver versus Visla copper. Can you tell us, these are separate entities, correct?
Very separate entities, the same management team. Our friend Craig Perry from Inventa Capital, first-class guy. Visla silver is proven. This is a deposit that is almost certainly going to be a mine. High grade, large size, still exploration upside. Political risk in Brazil, where the new president of Brazil is hostile to mining, which is unfortunate. Visla copper is much earlier stage, lower grade, potentially big, in the People's Republic of British Columbia, which I believe is equally risky to Mexico. I guess the bottom line for me is I own Visla silver. I don't own Visla copper. I want to be, on a prospective sense, in the lowest cash cost quartile in any commodity I'm producing. Visla silver will clearly do that in the silver business. I also want to be in the best quartile in terms of return on capital employed in any commodity, but at least above 25% return on capital employed. Visla silver will certainly be there. Visla copper is thus far lower grade, albeit a large deposit, and I'm not sure that the development metrics, should we get to that point, would put them in the lowest cash cost quartile or the highest ROCE quartile worldwide.
Let's see. A question from David. He's asking about two Australian gold stocks. One of them I think you've spoken about before. That is Greatland Gold, Rick?
Yep. Greatland we have as a 4 in our ranking system. Has grade, size, location. A wonderful group. It got ahead of itself in price a couple of years ago, but I'm attracted to Greatland.
Okay, the other is Sol Gold.
Sol Gold takes courage. Very large copper gold deposit, high capital cost to put it in production, some localized political risk in Ecuador, although the Ecuadorian government has gone from anti-mining to pro-mining. A less clear way to value creation than Greatland because of much larger capital expenditures. It is one that I have owned. In fact, I was a large shareholder in the company that made the discovery and farmed out to Sol Gold, which was subsequently taken over. I no longer own it, although I do own Greatland.
Okay, let's see. Sri Krishna from Ogdensburg, New York says hi. From Han, Rick, please comment on Defiance Silver and Suma Silver.
I don't know enough about either to value my own comment.
Okay, from JJ, let's talk about Vanadium Corp Resources, having a large low-grade vanadium deposit and a patented electrolyte flow battery technology they're trying to put into production.
I'm concerned about technology because I don't understand it. So I can never ascribe value to an asset I don't understand. A company that has a substantial component of its market capitalization involved in process and technology is always a company that I'm going to undervalue due to my own ignorance. In the vanadium business, I would much rather be in production than attempting to get into production. So from that viewpoint, I am a Largo holder. And I've been punished for being a Largo holder for about a year. But the idea that I can buy an existing producing vanadium mine with 20 years of reserves that is cash flow positive, if not profitable at today's depressed vanadium prices, rather than trying to finish off, permit, finance, and put into production a vanadium deposit seems more attractive to me.
Yeah, being punished for 1 year is nothing in this space. Just in case anyone is new joining us, you have to have a thick skin. Absolutely. Question from Conrad. Rick, how do you feel about UEC's earnings report?
I'm disappointed by UEC's continuingly high G&A. I'm attracted to the range of assets that they put together. The trailings earning report is probably less important to the share price than the pace and capital expense that they have to implement and increase production both in Wyoming and Texas. It makes pretty good sense that if you're growing a company of its size and doing as many things simultaneously as they are, that you would have stubbornly high G&A, and probably the investor needs to amortize some of that G&A, pardon me, against future free cash flow. But I do need to admit that I'm disappointed by the stubbornly high G&A across that whole group.
Okay, let's see. And he adds, any thoughts on China Central Bank halting their gold purchases?
None.
Sounds
I
like a
don't have
pause.
any comment.
Yeah.
I suspect that it might be price related. I suspect that they might have felt that gold was cheaper relative to their holdings of U.S. Treasuries than it is today.
Yeah. Rick, on your opening remarks, you talk about maybe we just need a little bit more time until the equities catch up with the metal. Of course, we are at the point in the interest rate cycle where oftentimes a recession is triggered, right? We were at that 5.25%, 5.5% range. The last two times we were up there, I think we went into a recession pretty much right away. I suspect maybe they're trying to hold that off until after the election, but I don't know. It would be shocking if they could hold it off, indefinitely, right?
Yeah, and that will impact the gold price, although we don't know how.
I'm thinking about equities, though, Rick, too.
Oh, in terms of equities, recession, particularly if it's accompanied by a liquidity squeeze, that gets ugly. People don't understand that a liquidity squeeze takes no prisoners. High-quality companies come back sooner, but they get punished too. I remember the supposition was in the 1997 crash and later in the 2008 crash that gold and gold stocks would hold up. Turned out gold stocks were stocks. It turned out, too, that the sell decision wasn't made by investors. It was made by margin clerks, and they sold whatever had a bid, including prominently gold. So if we have a recession, I'm not saying we will, I don't know, and in particular, if we have a liquidity-driven event, strap on your seatbelts. It is going to be a wonderful buying opportunity if you have both cash and courage.
Yeah, something that looks kind of like indiscriminate selling by bean counters can be an opportunity, right? That's what Doug Silver says. He loves it when there's some type of corporate restructuring and the bean counters come in and clean up the royalty streaming portfolio. He says it's a wonderful opportunity to pick up some good quality assets.
And that, of course, happens in major markets. I remember in the 2008 crash, Briefly, Kinder Morgan, very high quality company, decent balance sheet, wonderful business, all localized monopolies, was selling at a 14% yield. These are the sort of things that accompany liquidity squeezes if you have the cash and the courage to take advantage of them.
Right. So obviously companies at that point will be selling for much lower than they were just, a week earlier. But what things do you look at, Rick? Because certainly, access to capital is important, and a company
That's the first thing you look for.
Yeah. Okay.
That's the first thing you look for. Capital consumers are very high risk. You look for high quality businesses where the baby's got thrown out with the bathwater. My favorite example of that is, and I would ask anybody listening to this to do it just for fun. Google Berkshire Hathaway and get a stock chart going back to the middle 60s. Buffett has pointed out that 4 times during his tenure as CEO of Berkshire Hathaway, that the stock has declined by 50% or more in over an 18-month time frame. And if you look at the stock chart going back to the 1960s, you cannot see those declines. They were ugly when they occurred. I experienced a couple of them myself as a shareholder. And you don't feel good about your highest quality holding declining by 50%. But if you juxtapose the price of the company relative to the value of the company, you understand that it's an opportunity, not a risk. And that means, as an example, as a resource company holder, if you saw, and I'm not saying all of this as though a liquidity-related decline is imminent, but for instructional purposes, if you saw one and you were looking to take advantage, you would either take advantage in the best end of your portfolio, which is to say the Exxons or the Franco-Nevadas of the world, or if you were looking for quantum gains, you would come into the juniors where you absolutely positively knew that they had a viable project and they had enough capital that they weren't going to have to return to capital markets for 18 months or 2 years. When liquidity is scarce, the tertiary issuers, and there's nothing more tertiary than a junior mining company, are the worst affected.
Evan wants to talk about coal, Rick. He's asking if you can compare and contrast the various players. He lists Whitehaven, Alpha Metallurgical Resources, Warrior Metals, Coal, and Peabody Energy.
The first and the last are industry-wide in the best cost quartile, so I like them. The American coal producers, while they enjoy real advantages, particularly in the met space, are not necessarily low-cost producers. What I have found is that in periods where the coal quote is strong and increasing, that in truth you get better share price performance from companies that aren't in the lowest cost quartile. As volumes go up and as the selling prices go up, the margin in inefficient producers outpaces the margin gain in efficient producers. But efficient producers shelter you from the downside. And I am very much a believer, particularly in commodity materials, that you want to have the ability to win the last man standing contest. I'm willing to give up a bit of my upside if you take away most of my downside.
Okay. And that's a common theme with you. Not a bad thought process for anyone, even someone who considers themselves a little bit aggressive. This sector is already aggressive enough. If you ask me.
I'm embarrassed to say it took me 15 years to learn it, Albert. So.
Yeah, I mean it's all about risk weighted return, isn't it? Right. Let's see. Mike Townsend asking about Great Pacific Gold. Rick, your thoughts on the long term?
Not enough knowledge to comment.
Okay. Michael Lim asks your thoughts about Midland exploration.
I'm attracted to Midland. I'm a shareholder, albeit not a large shareholder. For those listeners who don't know about Midland, it's a prospect generator in Quebec, a competitor of Azimuth, who we recently interviewed in conjunction with the Natural Resources Investment Symposium. Very high quality group of collaborators, including the government of Quebec and some of the largest mining companies in the world. large range of projects farmed out using other people's money, I'm attracted to Midland. Also, access to what I laughingly call Quebec Inc., that group of parastatal corporations in Quebec that funds at taxpayer expense private sector mining initiatives.
Rick, I don't know if we've had a chance to talk in the classroom since you did the interview with Lee Courier. So let me ask you now your thoughts on how that went last week with Lee.
I want to commend Lee for having the guts to come on the show and defend himself. I think he did a reasonable job of acquitting himself. I forgot to ask him a question, which I'd like to ask him on camera, which is to say, what benefit to shareholders accrues to sponsoring sports events or a stadium?
Some people in the chat wanted to know about that as well.
If you, he made some important revelations, which I hope are true. The first is that the most recent financing, at terms as a shareholder that I wasn't in favor of, were strategic, meaning that he needed the uranium to secure the offtake agreements that would themselves secure the production finance. If that's true, and I sort of believe him, that's an excusable move. I thought the terms involved in the convertible preferred were such that I chastised him for not giving me access to some, because I think they were very, very investor-friendly terms. He also said that they had sufficient working capital now that they don't need to finance again, which I think is important. He pointed out himself that maybe not on an NAV basis because it's a long-lived reserve, but rather on a free cash flow multiple or enterprise value basis, that once the project is in production, that they could conceivably support a market capitalization of $30 to $40 billion. Given that their current market capitalization is sub $6 billion, what it means is that any additional stock that they issue now is highly dilutive. If you're talking about a $6 billion price tag for a $30 billion asset, you sell as little of it as you possibly can. I thought he did a much better job explaining the general and administrative expense levels, which I think are high, relative to the activities that the company is undergoing with regards to putting the project in production. One could argue for the amortization rather than expensing of some of this G&A, because rightly it probably could be categorized as a project expense. And it was useful to hear him, a CA, explain that in a way that I could understand. I'm still concerned about the tenor of the financial public relations expense, particularly around these sporting activities. I'm not sure what possible benefit that has to shareholders. And to the extent that as a consequence of that expense, that he has to issue more stock and dilute my ultimate ownership in that business, then I'm aggrieved.
Right. And so the idea of that somehow reducing cost of capital, is that something that flies with you at all?
I personally think that's silly. I think that the people who watch sporting events are unlikely, in a statistically significant sense, of becoming shareholders in a development stage uranium asset. My suspicion is that if you spent more time and effort talking to existing natural resource investors, that you would have a better outcome. He's also made a strategic pivot because of the reception of the Australian market over the last 2 years to resource equities, to focus his financial public relations efforts and listing expense in Australia rather than North America. I think that's a mistake. I think the right place now to sell, to interest people in buying NextGen is probably first off the United States, which is the largest savings and investment market in the world and underserved in natural resources, and probably secondarily in Japan, where there is a newfound favor around nuclear, with the restart of the Japanese nuclear fleet and the incredible turnaround in Japanese sentiment, where 80% of the population was opposed to a restart of the plants 6 or 7 years ago, and now 70% of the population favors a restart. So I question his pivot to Australia, which I think he probably did simply because of his familiarity with that market.
Okay. And that interview is up in the classroom in case you missed it. Just search for Lee Courier or NextGen. Rick, let's go on to Jan Willem, who asks, any opinion on Bravo Mining's latest drill results?
I just got off a call from Bravo Mining, which is to say right before this call. I have to say it's too early to call this a discovery, but it's hugely exciting for those people listening to this discussion who don't know. Bravo has a large and high-grade mafic, ultra-mafic massive sulfide discovery in Brazil, centered around nickel and platinum group metals. What's exciting is a brand new style of mineralization that was identified by an electromagnetic survey, which has proven to be a very different style of deposit, perhaps related to the initial event. But this is an iron oxide copper gold style deposit, which is a very different style of deposit. Very high grades. Importantly, it also proves an exploration concept. They flew the whole concession with helicopter-supported electromag. They ended up with about 40 anomalies. They used various techniques to get rid of some anomalies, and then on about 12 anomalies, they drilled a hole in what they thought was the center of the helicopter anomaly. They're notoriously unprecise, but they used that hole to throw a downhole EM survey in it, which is much, much, much more accurate. They've nil drilled 3 of those anomalies, exploration stage anomalies, and they made 3 hits, including 2 spectacular hits. 11 meters of 12% copper equivalent, that kind of thing. Importantly, an entirely different style of mineralization. It's way too early to tell if this is economic, but the fact that they have an exploration tool that is predictive and that it has been, when I say predictive, 3 for 3, and the grade and the tenor of the mineralization is extremely attractive. They are in a part of the Carajás district in Brazil, which is known for hosting very large and decent grade IOCGs. The best copper mine in Brazil, Salobo, is on the same trend, albeit 80 or 90 kilometers away. So the idea that you superimpose this exploration upside around iron oxide, copper, gold with a already world-class development asset in the nickel and PGM space is attractive to me.
Rick, how much certainty do you need in something like this before you decide to move? Because once there's certainty,
depends on how big it is, Albert. It depends on how big it is. If the data can be very, very, very inclusive. If the size of the prize is stupidly large relative to the market cap, I am really, really, really really, really, really willing to take a 1 in 10 chance for 100 to 1 return. Particularly if I believe that my downside isn't 100%, but is rather something more modest, like 30 or 40. I'm sadly very accustomed to taking 25% losses, 30% losses, 40% losses, which is one of the reasons why I've enjoyed scores of 10-fold gains and the occasional 100-fold gain. So my willingness to take risk really goes to the quality of the data and the size of the prize. It also increasingly goes to the quality of the people who are explaining the thesis, have developed the thesis. You'll know in the Rule Classroom, Albert, that I've talked a lot about evaluating the thesis partly by the person who originated it and whether or not the thesis was merely convenient or established by ground truths. And where the person who developed the thesis and explains to me is somebody who has enough credibility related to the thesis that I give a damn what he or she says. And in the case as an example of Bravo, all those are true.
Okay. Let's see. From Dean. Dean says, "Hi, gentlemen. Thoughts on Hannan Metals? Hannan.
I'm a Hannan shareholder. That comes under the heading improbable, but insane upside. What they're trying to do is discover a new mineralized province, albeit with some tantalizing hints. They can't even get a drill permit. They are in a place with political risk and sociological risk. If they are right, and I think there's a low probability of it, this stock could be a 100-bagger. There's a part of me who says that I have to participate every now and then in games like this. I have a high personal regard for the guy who generated the idea. I consider him to be a brilliant conceptual geologist. Thus far, he has proven to be much less adept at navigating the politics of Brazil the politics of Peru or the sociology of the distal parts of the Amazon basin, which is to say, 2 years in, while they've been able to do a lot of surface work, they still haven't been able to get a drilling permit to test the thesis.
Yeah. That's why you look for relevant experience and success, right? I mean, you talk about that a lot.
Right. And I have a high tolerance for failure, Albert.
Okay. From Han, Rick, is there any platinum and palladium public company currently producing that is not in Russia, South Africa, or Zimbabwe?
I'll have to tax my memory. None of consequence. The biggest producer outside those countries is Sibanye-Stillwater, which is also one of the biggest producers in South Africa, so it's hardly a pure play. There are companies, one of which we interviewed today, and I assume you'll publish later, which has an advanced exploration stage assets. It's Chalice in Australia, platinum, palladium, nickel discovery in Western Australia. Won't be in production for probably 4 years. I would point questioners again to Centaurus, an Australian listing, which will be at the Natural Resources Investment Symposium that's in Brazil. They, too, are not producers. So, I want to emphasize that.
Okay, let's see. Okay, sorry, sir, I cannot pronounce your name. IUZ. Rick, what do you think about today's IEA report regarding oil demand being 8 million barrels less than supply?
I'm embarrassed to say I didn't read it. I've had a busy day, so I'll look it up after the interview. It wouldn't surprise me, given the surging levels of U.S. supply, but I can't comment on it because I haven't read it.
Okay. The early feedback on the M&A boot camp looks good, Rick. So it's something that we're going to have to consider. I got a direct message from one of the class members asking why we haven't done gold yet in a boot camp. It's like an obvious one. Perhaps it was too obvious for us. We wanted to cut our teeth on something a little harder. But I told him we will definitely get to gold. That's obviously just waiting to be done.
No, I think that's right. I think your comment is right. When we started the boot camp series, the most obvious opportunity to me was uranium. It was hated, and we had access to a very good faculty for that. I liked the silver boot camp because it was hated too. And then naturally, we were asked by our customers to focus on areas around natural resource investing that were of interest to them. And gold was a rather obvious oversight. Now, gold gets talked about a lot. And you and I, Albert, will need to decide how we differentiate our product from all of the other products out there associated with gold. I suspect by being somewhat more tempered and civil.
Right.
But, I think it's a really good idea. And I think maybe we could do it in conjunction with the World Gold Council and find a keynote speaker other than Rick Rule who would bring an overall perspective on gold that would be useful to our attendees. Certainly because of my past, we could get some very high quality faculty in the gold business, and I think that'd be fun.
I mean, that's the key, right? The great faculty is always the key to our events, and also the great participation from the members. Ricardo's asking about Greatland. We hit that earlier in the stream, Ricardo, so just wait for this to be posted, wind back, and you'll get your question answered. sticking with gold, David asked, like, Rick, why have all the gold and silver stocks been hammered down so much lately?
I think, well, in the first instance, hammered down is an interesting phrase.
That's mine,
They
not
weren't up.
his. Yeah.
They weren't up enough to get hammered down. I think a different question may be why the gold equities haven't participated in the move that gold has participated in. We talked about that at the beginning of the session. The gold buyer has been central banks, and central banks don't buy gold stocks. A second reason, I think, is investor cynicism around gold mining companies as companies. Longtime listeners to this broadcast will remember our discussion about the fact that in the decade 2000 to 2010, while the gold price was up almost sevenfold, free cash flow per share on the Philadelphia Gold and Silver Stock Index declined. It took real skill for the industry to generate declining free cash flow per share when the price of their product increased so much. So I think there is some skepticism. I believe that this coming quarter, you will start to see the higher quality companies in the sector, the companies with better cost control and better deposits, the Agnicos, the Alamoses, the Endeavors of the world, surprise people positively with their margins. You may see other surprises, negative surprises too, but I believe that you're going to start seeing operational results that, if nothing else, attract the traditional gold stock buyers back into the gold stock market, and maybe attract some generalist investors into the market.
Okay, Rick, today we have a few people joining us from YouTube as well as some of the other social media platforms. I want to go out to those platforms for a quick question. RBBT asked about a bunch of stocks, and I will actually direct you to Rule Classroom if you want to come in. Rick has made comments about most of these companies in our regular live streams, which you'll find in Rule Classroom. But let me pull out one of his companies. That's Ivanhoe Electric, including its new Typhoon technology. Rick, your thoughts?
So I said earlier today that I assign no benefit in market capitalization to technology, much to the chagrin of my friend Robert Friedland, who believes that this Typhoon technology will change mineral exploration forever, for the better. And I'm inclined to pay attention to Robert because he made me so much money in the past. But I need to say that the more he explains that technology, the less I personally understand it. So I'm gonna pass on that discussion. I will say that some very, very, very high quality partners, including BHP, who have their own technology, have been doing trials with Typhoon, which is, I think, a great testimony. I own Ivanhoe Electric, although I think based on its current asset base, it's at least fully priced. The discovery that they made in Arizona is a real discovery. How much Typhoon had to do with that, I don't know. And the exploration upside that they have in Tintic, both for the very high-grade silver gold deposits that have been known about for a century, but also because of the deep porphyry potential. Remember that the largest porphyry in the U.S., Bingham Canyon, is the same age rock about 40 miles away. This is attractive. Friedland has a unique ability to attract and motivate extraordinarily highly skilled geologists. And he has also been very good over the last 40 years at looking through the junior mining community at high quality projects that have been wrecked by bad managements and resurrecting them. And so I am a long-term holder of Ivanhoe, but I would tell people that at today's share price, it's fully priced. You are betting on Robert, you're betting on the team, and maybe you're betting on Typhoon technology. I'm not criticizing the technology. I'm just telling people that I don't have the ability to analyze it.
All right. Pete is joining us on LinkedIn. Hello to you, Pete. And let's get a question from X. And that would be from Protect Your Wealth. Rick, your thoughts on Adriatic Metals Bosnia?
I'm an Adriatic Metals shareholder. From Lobo's viewpoint, I've probably overstayed my welcome. They are in production. I believe that the ramp up from on time, on budget completion to nameplate capacity will take 2 more quarters. I believe it's going to be successful. The grade reconciliations have been higher, which is to say the recoveries of metal relative to the recoveries that were forecast in the feasibility study have reconciled higher. I think, too, that the company is currently valued as a base metals company, producing as they do copper and zinc. I think that deposit will economically be silver-centric, and I think ultimately that the company will be viewed as a silver company. So I think, all things considered, that stock goes higher. Your risk there isn't geologic. It's almost certainly a volcanogenic massive sulfide, which means that it is highly likely that the 2 clusters that they've discovered will be kept company by more clusters. These deposits, like Ali used to say, they're punches in bunches, and so I think the exploration upside is certain. You have some political risk in Bosnia. I mean, this is a really traumatized country. The war that involved the breakup of the former Yugoslavia was particularly vicious in Bosnia. And the social scars, I think, continue there. There are allegations of political corruption on a national basis, although when last year we interviewed the company, they said, as one might expect them to say, that they hadn't experienced corruption themselves.
Right. One more from X. Freedom Fan asked, Rick, would you consider being chief economic advisor in the next U.S. administration? I'll spin that into a serious question, Rick, unless the answer is yes, and then you can go on talking. Would you ever think about politics, getting involved in politics in any way, local or otherwise?
Were I elected, I would demand an immediate recount, Albert.
That's a good one, yes. Who said that? That's a good one.
Carl Hess,
Okay.
who was a good friend of mine, rest in peace, wonderful guy, when he was running for senator in West Virginia. For those of you who don't know Carl Hess, he was, as far as I know, the first white member of the Black Panther Party. He was also press secretary for the Hells Angels. He was much more widely known as Barry Goldwater's speechwriter. Although he was Libertarian, not Republican. He ran for Senate in West Virginia as a Libertarian, and he was eloquent enough that he was interviewed by the New Yorker magazine, an interview worth reading if you can find it. And it was then that the New Yorker, when they asked him what he would do were he elected, because they found him unelectable, he looked at them and smiled and said, "I demand an immediate recount," which I thought was a golden phrase. I'm active, as you know, Albert, in a student libertarian organization called Students for Liberty, where our hope is that we can introduce more young people to the concept of individual liberty and freedom. And also, we, by the way, touched 160,000 students last year, where we can prepare some number of them to be leaders of libertarian thought, at least in civil society, if not in electoral politics. I will admit that I vote very seldom for a candidate, but I do participate in local politics by voting no on every spending measure I can, even if I'm personally in favor of the cause that they propose to steal money to fund.
Okay, just a few minutes left, Rick. I want to tell people about the new event we have coming up next week. It's called Do Your Diligence with Rick Rule. This is an idea that you had about maybe a year ago or more, and this is like a Shark Tank-like event where you take on ambitious, confident entrepreneurs in the junior mining sector who feel very strongly about their idea, and they want to pitch it to you in a live event. And our inaugural guest is going to be Jason Jessup of Magna Mining. So kudos to these guys for stepping up and volunteering to do something that has no precedent, at least in this form. Rick, why did you come up with this idea? And what do you have in store for us? Because this sounds really fun.
Albert, this is going to sound really conceited, I guess, but I didn't start doing the Rule Classroom for money. Just being completely honest, I'm already rich. I did it for fun. I want to get paid, don't get me wrong. But I looked at what was missing in broadcasts like ours. There's a lot of advertisers, but there's not very many educators. I also think the process of due diligence is fun. The whole process of investing money for me is sort of like a three-dimensional chess game. And I've enjoyed it a lot. And I think there's a certain tension involved in the process of due diligence, which doesn't translate well into a description. I think somebody has to see it live. I've spent thousands of hours doing in-person due diligence of issuers around investing my own money and my clients' money. And I have to say I've enjoyed most of it. And I can talk to people about how to do it. And they can think, oh, that makes sense. But I think being a participant in it live will be very, very, very instructive. We aren't at present charging the issuers for this, but I hope in the future to be able to charge companies to participate in this. 100 or so companies a year tell me they're selling for half what they're worth, and what they're worth is going to grow rapidly, and tell me that I should introduce my audience to them. And so I'm going to start taking them up on that. And I ultimately see this product as one where we let the companies produce, and then we subject them to not hostile, but focused questioning. And then we open up the process to the members from the rural classroom to employ the lessons that we've taught them. So this, for me, very much is a sort of a bench test where we learn how to do this, and our audience learns and teaches us how to consume it and make it more consumable. I was attracted when we proposed this to Magna, because they were telling us how undervalued we were. And you'll remember, Albert, we said, would you be interested in proving it live? The largest shareholder of Magna is a good friend of mine, Johnny Goodman, and I proposed it to him over dinner. I said, really, really having a credible program where the company could demonstrate its worth to a bunch of investors is probably the most intelligent financial public relations investment you could make if you get it right. Otherwise, it might be the worst mistake of your decade. I think that this process, in an ongoing basis, will, in a sense, be self-reinforcing, which is to say, I think after we do the first couple of these, the only companies that would subject themselves to these processes are probably pretty good companies. But we'll see.
Right. And this is going to be over a 2-hour event. We're going to let them talk for a little bit of it, but you're going to go get after the company for about 45 minutes. So,
but I want to say this isn't necessarily hostile. It's just going to be frank. I'm not trying to trap them. This is not going to be an entertainment product like Shark Tank. This is going to be me, in effect, in their conference, letting them tell me why I ought to buy some stock or participate in the financing. So it's not necessarily hostile. On the other hand, they're well advised to be prepared.
Right. Because we've had sort of light touch interviews before, and again, not promotional, but different than what you're going to be doing next week, in the sense that next week there's going to be more of a probing about the discussion, and less maybe them telling us what they want to tell us, more than you asking what we want to know and bringing to light what we should know.
I think this process will be a little more broad-ranging and maybe a little less gentle than the discussion with NextGen. This is very much a discussion that would lead me to buy more Magna or sell what I have.
Right. And to your point, this is not; these are not gotcha interviews. These are companies. In this case, it's a company that you already own. No point wasting everyone's time with a company that you hate and doesn't have a chance and has these are good companies. However, this work needs to be done, and we all want to see how it's done. So this is going to be great. Go to Rule. Let's see. If you're in Rule Classroom, there's a link a pinned link at the top. If you're not, type rulesymposium.com/shark and you can get in. If you are a Rule Classroom Plus member, your admission is free. So really looking forward to this, Rick. It's going to be a fun time. And I think, we've already talked to some other companies about coming on and doing this. So I think there is interest because telling your story is what it's all about, right?
There's also a lot of interest in the industry, which is attractive to me. There are a couple of partners who are thinking about sponsoring this for us, depending on how we do with this. I would also ask our audience today whether they think, in addition to me questioning, there should be panels in future ones, whether or not we should bring in geologists that are familiar with the deposit type, financial analysts, that kind of thing. And if so, I would love it if they would name some names so that we could look for them for panelists. I have my own ideas, but the truth is, several thousand of us at the Rule Classroom have a broader range of experience and interest than just Albert and I.
Okay, so just a couple questions as we close. When and what time? June 19th, 4 p.m. To roughly 6 p.m. Pacific time. Everyone who registers will get access to the on-demand replay, unlimited. So if you can't join us, we hope you can join us on the day. But even if you can't, we advise you to get your ticket in advance because you get a 50% discount by signing up in advance, and you can watch the program at your leisure. How do you become a Rule Classroom Plus member? There is a pinned there's a pinned description in Rule Classroom. So just go ahead and look at the top of the screen in your feed. You'll see something there, information about that. If you're not a member at all, just go to ruleclassroom.com and you will see the information there. I think that's all we have time for, Rick. You've been nominated for Prime Minister. So maybe we'll pick up on that next week. Thanks so much, Rick. It's always a pleasure. Enjoy this very much. Thanks to everyone on X, LinkedIn, and YouTube who joined us today. If you want to become a member of the community, just go to ruleclassroom.com. Membership is free. We have a ton of resources in here from Rick, including a 14-part Intro to Natural Resources video course that will benefit you very much if you decide you want to be an investor in this space. So thanks, everyone. Rick, thank you, and I'll see you again soon.
Albert, thank you so much for causing this to occur.